show. And oh man, what a mess this thing is right now. And to add injury to insult, did you know that insurance companies in North Carolina are now asking for a 42% average rate hike in North Carolina? Now, what kind of sucks about this is that this is probably necessary, not just a money grab. Here's the deal. Like California, and I'm sure Florida, this is a long time coming. We've known about this for years and have just put it on the back burner. These insurance companies, they're ready to go up, under, kaput, done. In over 2,000 pages of data filed just this last January, meaning they've known about this for a while, the Rate Bureau sought proposed increases varying widely from just over 4% in some part of the mountains to 99% in some part of the beach areas. Who would have thought this whole thing would have happened in the mountain areas? Proposed increases in and around big cities like Raleigh, Charlotte, and Greensboro are roughly 40%, thus 42% average hikes. Now, I've got to think the events of the last couple of weeks are going to exacerbate the problem and the urgency of said problem. Here's the deal. These insurers are not going to get everything they need to offset the cost of the Carolina floods, the Florida hurricanes, and for that matter, even the inevitable California fires, which are about to come. Especially with inflation. You have to understand this. Inflation is the big killer here. It's a huge killer for insurance companies. The $90 per month policy is not going to replace a $900,000 home. It never pencils. It never will. Yet with values going up, costs going up, and the increase in natural disasters, it raises rates across the board for everybody in the country and in a big way. Or you're going to be looking at nothing but insolvent insurance companies. Not in the distant future, but right now. In short, everyone in every state, you can expect to see your premiums go up, and in some cases, significantly, because someone has to pay for this mess. So loan officers, please, 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 dial in your insurance in an absolute fashion and as quick as possible on all of your loans, because the landscape of homeowners insurance, it's on the move and it's changing every day. Let's face it, buyers, well, they're kind of on a veritable strike right now over the cost of buying homes. Rates have come down, concessions are to be had, yet buyers are still sitting on the fence. Listen to this. Fannie Mae said today that its Home Purchase Sentiment Index, its HPSI, which has several components, increased in September to 73.9%. And that's a 30-month high, meaning they feel pretty good about things, yet they're still not buying. As consumers reported survey high optimism that mortgage rates are going to decline over the next 12 months. A record 42% of those polled said that they expect mortgage rates to decline, up from 39% just a month earlier and 24% just 2 months earlier. So more people are looking at rates coming down even further. Perhaps that's the reason they're sitting on the fence right now. So as a result, well, buyers, they ain't buying. So who's going to tell them? According to the folks over at Fortune magazine, mortgage rates today may be as good as they get, and I concur. Never mind everything we said over the past couple of months. Things have changed, you see. That's what the mortgage market is today. It is in constant flux. Never before have we seen such a schizophrenic market. Yet, here we are. It's everybody trying to solve it. Just back off and let the market deal with this. Now, Chairman Powell of the Fed Reserve cautioned that Fed officials are in no hurry to cut rates any further. Finally, Friday's blockbuster job report pointed to a still robust economy that needs plenty of workers who are demanding higher wages. Wall Street analysts slashed their forecast on Fed rate cuts, and the 10-year yield soared 12 basis points to 3.971%. The data was such a shock, some prognosticators even said the Fed would have to pause on cutting rates to avoid reaccelerating, that's right, inflation, the thing that's killing our insurers as well. You see how it's all connected? So the market you see today is looking like the market that you're going to see tomorrow, with higher insurance rates, of course. But listen, guys, I mean this too. This is good news. You're self-employed. You chose this. Nobody is coming to save you. Now that you know that, it's time to get to work. It's kind of a, kill or be killed. It's just not going to be tomorrow. So ask yourself, are you going to bump off your competition because they're falling like flies right now, or are they going to bump you off and you become the statistic? That's what you need to ponder when you go to bed tonight. And when you're finished, I hope you get mad and get your ass to work. That's a solution. Hope this helps. Hey, Oaktree's got 3 new DSCR programs. I just did an hour Q&A about these programs and how you can go ahead and sell them. I think the whole thing turned out really great. If you'd like to check it out and you got some downtime to learn the fluent language of non-QM and how it can help your business, just go ahead and click on the video link down below. And of course, if you have any questions, just click the link and fill out the information. We'll get back to you.